Hello guys, good evening. This is JK from your weekly investment channel. Thank you for tuning in. And I would like to give you some market updates. What happened today? How did the market close? Despite having some very bad news over the whole week, the market was very resilient. It did not give up all the gains. So let's look at the market action today, guys. So I'm going to be referring SPY. SPY stands for S&P 500. It's an ETF which holds about 500 companies. For those of you, who are wondering what is SPY means, SPY really calls for all the sectors. Um, and if you want to look at that, the sectors involved in SPY, I think in Think or Swim, you can just do this. It will give you a, list of industries that SPY covers, right? It covers a pretty broad market, right? You can see a lot of information in this. SPY really calls for the market action. Either way, any impact to SPY means it's a broader market impact, and vice versa, right? If something really bounces, for example, Apple, Microsoft, Amazon, Google, Tesla, top holdings, if these things kind of bounce, the SPY is going to be moving in the right direction, right? It is going to go whichever direction these major stocks are performing. Now, specifically on the charting, right? I want to give you guys some insight into these charts. So this is a daily chart, okay? This is a daily chart covering for 1 year, right? It starts from last year, March, till Feb, end of Feb, right? Actually, Feb to Feb, right? It's 1 year 1 year chart. So there are two types of traders. In my view, there could be several of them, but one is a short-term trader and a long-term traders, right? Traders are two types: short-term versus long-term, right? Um, Long-term traders definitely have to look at these long-term trends. You don't have to worry about the fluctuations happening, every day, right? You definitely have to look at long-term where the stocks are. If you look at this, I think last October we had the lows at 348, and today it is 408. It's a big jump, right? If you look at literally the bounce is about 50% and above, right? And if you look at in like end of December last year, it was 376 and it bounced off from there, right? So if you look at this, it is like, it is going up. Let me just highlight here. So from here, it just went here. It stopped for some time. It kind of traded sideways, right? This way. If you look at it, the market did not go low, right? And after a few days, it went sideways, and then again, it kind of, stayed here, consolidated for some time. And then what happened, right? It has gone up, right? So the market does really want to go up. At least my point of view. Every day you have some market events that impacts this market, but if you look at it overall, it's very strong. At least near term, it's strong. But if somebody comes and says they're going to raise 50 basis points or 75 basis points or 100 basis points, then those are market moving red flag events, right? So those will definitely pull the markets down just because it has a direct impact on the borrowing costs, the interest. You, me, the businesses, everybody has impacted by those rate hikes, right? And the question is how long the rates are going to be high, right? If it is going to be a short term, 6 months, okay, people can live with that. If it is going to be long term, 2 years, 3 years, then definitely markets are not going to be sustaining on these high interest rate environment, right? There are some stocks that will survive, but predominantly it's a really bad news for the market, the economy, especially the technology sector, right? Which S&P is big part of. Um, Everything, including energy, everything will lose out, and inflation and recession are something that is going to rise. I mean, inflation potentially could contain, but recession is something you cannot avoid, right? So, having said that, let's look at the market action today. Um, If you are looking at intraday, let's say if you're an intraday trader, you probably will look at a 1 day, 1 minute chart, right? This is a 1 day, 1 minute chart, right? It starts from, um, Thursday. It is at 9 a.m. or, earlier, 8 Eastern, right? 8 Eastern, and goes up to 8 Eastern up to even now, even still it is trading. I think you will see this trade till 8 at least in this platform, but sometimes the SPY is supposed to be trading throughout, which will tie to the ES, but at least in this platform, I don't know if I can see 24/7, 24/5, I mean, not 7, 24/5, right? So markets are still trading, but they are trading lower than what it was, what it closed. It closed somewhere here. It closed at 408, and then ever since that it is trading down, right? So if you're an intraday trader, you look at this, and again, if you look at intraday, intra-week traders, then you can look at 5 days, how the markets perform. Definitely, from the week beginning to weekend, it is definitely higher. Whatever happens after the market close, they are short-term traders. Definitely, they are short-term traders. They trade quickly, get in, get out. But how do they trade? They trade something called futures trading. The futures for S&P 500 is ES, right? We have a ES futures. Those are very expensive, guys. A regular trader like you and me, we cannot afford it, and your brokerage account will not allow you to trade futures because it's very expensive, and each contract it costs you a lot of money. So, for example, if I do like /ES, and if I want to trade a contract, it is going to be pretty expensive. So let's say I'm going to trade something that ends tomorrow. So these go in a lot. Let's say even if I want to buy a contract, say today it's 4089. Let's say if I want to buy something for let's say 4170, right? This is the cheapest one, right? If I say buy a single, like say if I just say 1 unit, it's going to be like $50, right? Let's say if I'm going to trade this here for let's say 4100, 4100, it's pretty expensive. It cost me like $6,000 per contract. Okay, so this is 10. Anyway, I'll just reduce it to say 1, right? If I do that, it is $687, but the premium goes up, because it's 1 day out there. Let's say if I'm going to trade something 8 days out next week, these are going to cost me a lot of money, right? If I just say single, and if I say 1 unit, let's say $500, right? So this is very expensive, guys. I think this is a ES mini futures. We are not trading the ES futures. It's a mini futures, right? slash NQ is for NASDAQ. Net guys, futures tradings are really expensive and very risky, and it is not for individual traders. It is very risky, guys. So let's not talk about it. But the markets went really, was really performing well. It did not give up all the gains we had so far. So there is no worry at this point. We'll have to wait and see what the numbers are, and if there's going to be any more rate hikes. Having said that, I think you know what I mean by short-term and long-term traders, right? This is again a chart, daily chart, and it's for 1 year. So this will really tell you where the market is. And if you look at it, today's action, it's kind of lower compared to yesterday, and it took off the lows of yesterday. So it closed around 407. So it looks bearish for this week, but overall it's good as long as it doesn't take out your 404. That we have to wait and see tomorrow. The 404 level, which is also a key level, with respect to the 50% of Fibonacci retracement. If it goes below that, it is really going to be bearish, but we'll wait and see how the markets turn tomorrow. And also going to the long weekend, guys, I think markets are going to sell off. I would see somebody coming and protecting this market in terms of not getting below 404. Let's see tomorrow how it turns out, guys. Thank you so much for tuning in. If you like this video, please subscribe to my channel and stay tuned for more videos tomorrow, guys. Tomorrow I don't know if I'm going to be able to give any pre-market or entire market coverage because I'll be out of pocket. But if not, I'll see you guys next week. Thank you. Cheers.